Hey crypto lovers! Welcome back to your channel, AI FunTech. Today, we're diving deep into a topic that's been sparking endless debates at coffee shops and boardrooms alike: Bitcoin's meteoric rise. Will it hit $130,000 by March? Buckle up, because we're about to embark on a roller coaster journey filled with insights, humor, and a few cliffhangers to keep you on the edge of your seat. Picture this. It's February 2nd, 2025, and Bitcoin is dancing around $105,200, a figure that's making even the most skeptical investors raise an eyebrow. After weathering the storm of the 2022 to 2023 bear market, where BTC tumbled below $20,000, the crypto world is buzzing with renewed energy. What's behind this dazzling comeback? Let's unravel the mystery. Let's look at the Bitcoin's recent performance. It's been a wild ride, folks. Just a few years ago, Bitcoin was in the doldrums, struggling to stay afloat. But then came the turning point. ETFs got approved, big institutional players stepped in, and the regulatory fog began to clear. Remember when Bitcoin hit its all-time high of $69,000 in 2021? That was just the beginning. With each passing day, anticipation grows as we inch closer to the next halving event, setting the stage for what could be the bull run of a lifetime. Quick question: who here remembers the panic of 2023? Drop a comment if you lived through it. Now let's check the factors driving the surge. Let's dive into the engine room of Bitcoin's rocket. What's powering this surge? Grab your popcorn. This part is packed with juicy details. 1. Bitcoin halving, the ultimate supply shock.
The latest Bitcoin halving occurred in April 2024, reducing the block reward from 6.25 BTC to 3.125 BTC. Historically, halvings have led to significant price increases in the following year. For those new to the term, a halving slashes the rewards for miners, effectively tightening the supply. Historically, this event has been a game changer. After the 2024 halving, Bitcoin rocketed from $51,000 to $108,000 in approximate 1 year. Imagine the excitement when the supply tightens even further in a market where institutions are now major players. Could we be witnessing the dawn of a new era where Bitcoin zooms past $130,000? Only time will tell.
2. Institutional adoption and ETF inflows. Now, here's where things get really interesting. Major financial giants like BlackRock, Fidelity, and ARK Invest aren't just dipping their toes into crypto, they're diving in headfirst. With the approval of Bitcoin ETFs in early 2024, institutional money has poured in like a tidal wave. In just a few short weeks, over $20 billion has flowed into Bitcoin funds. That's not just money, it's confidence, trust, and a whole lot of bullish sentiment. Ever wonder if your bank manager secretly dreams of Bitcoin? I mean, with billions flowing in, who wouldn't be excited? 3. Market sentiment and on-chain data. Let's talk numbers that tell a story. 75% of Bitcoin's circulating supply hasn't budged for over a year. Now, that's what I call holding strong. Record high hash rate. The Bitcoin network is more secure than ever. A soaring hash rate means miners are confident, and that's a big green flag. Decreasing exchange reserves. Fewer coins on exchanges means less selling pressure. When coins are held tight, the price just loves to climb. 4. Macro trends and inflation hedge. In these unpredictable economic times, Bitcoin isn't just a digital asset, it's becoming a modern-day safe haven. With inflation rearing its ugly head globally, more investors see Bitcoin as a store of value akin to gold. Countries like El Salvador have already taken the plunge, and regions like Texas and Illinois are exploring the idea of holding Bitcoin reserves. And here's a kicker. With rate cuts expected in 2025, more liquidity could mean an even stronger rally for risk assets like Bitcoin. I remember during the last inflation spike, watching fiat currencies lose value in real time. It was like watching sand slip through your fingers. Bitcoin, on the other hand, felt like that trusty old vault that never failed you. 5 technological advancements, the Lightning Network, and beyond. Bitcoin isn't just sitting pretty as digital gold, it's evolving. The Lightning Network is transforming transactions, making them faster and cheaper than ever before. And that's not all. Layer 2 solutions like stacks, STX, are opening up the world of smart contracts and decentralized apps, dApps, on Bitcoin's network. This tech upgrade means Bitcoin can now strut its stuff alongside Ethereum and Solana in the world of blockchain innovation. Now that we've covered what's fueling the fire, let's gaze into the crystal ball and talk predictions. And, of course, the risks that could throw a wrench into the works. Price predictions: $130,000 or even higher. The forecasts are nothing short of electrifying. Standard Chartered Bank is eyeing a future where Bitcoin touches $150,000 by late 2025. Bloomberg analysts have their sights set even higher, predicting a potential surge to $180,000 by year-end. Plan B's stock-to-flow model? It's hinting at figures that could skyrocket past $250,000. And then there's Cathie Wood of ARK Invest, who has been known to dream big, sometimes as high as $500,000 over the long term. Each of these predictions comes with its own set of assumptions and market dynamics, making it a thrilling game of what if. Now aware of potential risks to consider. Of course, no story is complete without a few plot twists. Here are some hurdles that could potentially slow down the rally. Regulatory crackdowns. While many countries are embracing crypto, others may decide to pull the brakes with stricter regulations. Macroeconomic shifts. Persistently high interest rates or sudden shifts in monetary policy might dry up liquidity, putting a damper on Bitcoin's momentum. Black swan events. From exchange collapses reminiscent of the FTX debacle to unexpected geopolitical crises, unforeseen events always lurk in the shadows. Miner capitulation. Post-halving, some smaller mining operations might struggle to stay afloat, causing short-term market volatility. What if one of these risks materializes at just the wrong moment? How would it affect your portfolio? Stay tuned as we continue to monitor these developments closely. Let's put ourselves in the shoes of a Bitcoin investor. Imagine you bought in at $50,000 in early 2024. Fast forward to today, and your investment has doubled. Now, you're standing at a crossroads. Do you cash out some profits or hold tight for even greater gains? History is a fickle friend here. Some who sold too early missed out on massive gains, while others who held too long felt the sting of a market correction. The savvy move? Perhaps a strategy of gradual profit-taking while maintaining a solid long-term position. What's your game plan? I believe balancing caution with ambition is key. For me, a mixed approach has always been the safest route in this wild, unpredictable market. Bitcoin's journey is anything but predictable. The real question isn't just whether Bitcoin will rise, but how high and how fast. Remember, this isn't financial advice, so always do your research before investing. DYOR. What do you think? If you enjoyed this deep dive, hit that like button, subscribe, and ring the notification bell so you never miss an update.